All right, guys, so this is our June update. All right, normal disclaimer for all of ours. It's not as relevant for here today, but just want to always share that. Okay, so we'll kind of quick start with the summary. So since the last time we talked, I always like giving you guys kind of a snapshot of what's changed basically in the last 3 months. So these are all units that have been completed. You can see the layout here. For example, 107, this probably had the most work. This building and this building had a lot of work. So 107, we finished unit 1, 4, 5, and 6, and 8. This was just a quick make ready. What we mean by make ready is that's just a typical clean it up. We didn't like go do drywall and add bathrooms and all sorts of stuff. It just mainly was cosmetics. And then, yeah, really all we have in progress now is we're just trying to clean up the exterior. So you can kind of see in the overhead picture, but we planted a lot of grass seed and trying to get it a little bit greener around here. But the nice part is for the first time, we actually had to hire a grounds crew and start to cut the grass. So everything's starting to grow in and look a little nicer. I do want to show you guys some of the renovations of 107. This building for sure had the biggest transformation. Like these units were in rough shape when we took them over, like completely unlivable. A lot of them were just stocked full of like old washers and dryers and appliances and just a big mess. So anyway, these ones all turned out really good. Just want to show you a couple pictures of those ones. And then, yeah, this is probably one of the things I'm most excited about is the short-term rentals. So you can, I know I shared this last time in March, and I just wanted to show you guys kind of the how we've been staging it up, because this has happened in all of our big multifamilies. We always, and if you guys, actually, the reason why I shared you a couple screenshots, this was my pro forma up here. So if you guys remember, I had a base case, a target, and then an STR mix. So on my STRs, I was hoping we could get around 1,800 a month. And this was like our really high case, which was just gonna blow it out of the water. But I want to show you guys now that we're starting to hit that, because if you look at June, we hit in revenue. This one unit hit 2,500, 21, 25. These are single 2-bedroom, 1-bath units that are being rented out through Airbnb and through like business to business short-term rentals. So they're all doing really, really well. And you can see how it's kind of staged up, right? This is the totals down here. See, we moved 7 to 6 to 8, 7, and then now we're hitting June, and we've already got $9,000 on the board for July. This is just reservations. But we do expect, I mean, summertime, it's going to be good weather. Obviously, we're less than an hour from Park City, so there's definitely going to be lots of traffic. So this is definitely excitement, and it's helping us really get the whole unit full. And so this has been one of my favorite parts, and something we're going to continue to do on our multifamilies is always carve out like 10 to 20% of the units, furnish them, and because we're just seeing a lot of demand for that. The other quick update is your interest payments should all be coming on the 21st. Always reach out. Our portal it's actually now, because, well, okay, I'll give you that update. So our total, we did raise the last 100,000. That was our plan all along, was to raise it in stages, because we didn't need all 1.7 up front, and we didn't want to accrue any more interest than we had to. So we just raised the final 100,000 because we just finished up the last bit of renovation. So we're fully raised at 1.7 million, which was super exciting. And yeah, so now that we finally got it raised, now I'm told through Avestor, we're working on the admin side, that we can actually set these things up on auto pay. But before, it was like a manual process because we hadn't fully raised everything. So we just had to do it manually. So, but if you guys ever do see anything or or see a payment or something, most of you guys are pretty good about letting us know. But they should be coming out. If you don't see it by the 21st, definitely reach out. But typically we send them around the 19th or the 20th. Let's see. This was from last time. This was 105, some of our before and afters.
Are there future units that are still being renovated? How many left?
Yes. We have, yeah, they're all renovated. So now we're just filling out the last couple long-term rentals. Because if I go back to slide 1, yeah, some of these units we're still filling up. And some of them we're also just balancing. We're seeing so much demand for these short-term. So some of the open units we're filling those we're actually making more revenue because we're putting beds in them. And then I know Colin probably knows this stuff too. We've been looking at co-living. We're actually, one of the units we're playing with, like trying to rent it by the room. It'll just increase more cash flow on the property. But yeah, we're just filling it. Yeah, so they're all renovated. Everything's done. We're just, we actually had our crew move out in the last, about the last, I think it was the last month. Our crew that's been there the whole time, they actually moved out. So now their unit is available, and we're just getting them all rented out. And then that's the other big update is, I don't want to give you guys a definitive timeline, but now my goal is over the next couple months of summer to get up to full 90% occupancy. And then once we have that, I'm typically told 3 months of 90%. Or 90 days at 90%, they say, is when we could start to go look at a refinance. But again, the market's always changing, and we've definitely got a lot more runway. But I would love to be refinanced by the end of the year, but I definitely don't want to get people's hopes up for that. But also, some of you guys might be like, probably don't want to be refinanced because you're making 15%. But either way, I'm definitely incentivized. I think I said that to all you guys when I was presenting this deal. Like I'm incentivized because when I refinance, then obviously my cost of capital goes down quite a bit. And then my hope is we close this one out and we can go do more deals together. So with that, I was going to share a couple other deals we are currently doing. So I don't have a picture of the one, but I'll actually just show you guys. Yeah, we just bought a new 120 unit in Evanston. I want to show you guys like another close one that we have now, Lilac Way. I was hoping I'd have a nice slide for you guys, but I'll just kind of show you on a map. So this one we closed on Tuesday. So we bought, Evanston's not a very big town, but anyway, we bought another 120 units this past week in the same town. So anyway, I'm excited to be able to have even more management power. So the nice thing is our crew moved out, right? But our crew was also kind of helping us manage showings and whatnot. But now that we bought this 120 unit, they've got a full-time manager that we're going to be able to share and kind of share resources. So it's going to help us out and give us even more manpower up there. So that was one exciting update I actually closed that. We raised $3 million of equity on that deal, which was super exciting. It's actually a rare deal where we didn't have to go do a bunch of value add. Those units are actually in really good shape. But the kind of funny thing is they're running out. This is absolutely mind blowing, but they are running 120 units and they don't, all their leases are paper leases, hand signed, like in a filing cabinet. And they take all their rents through Venmo, cash, check, money order. Like they have no electronic property management system, which is absolutely baffling that you can do that in 2025. But the other side of me is this is why we continue to find really good deals in Wyoming, because I always tell you guys, Wyoming's like 20 years behind the rest of the country, and it literally is. Like they're still doing handwritten leases on 120. Like I figured these would be professional property owners, right? But anyway, so we took that one over. It's not a big value add. We're just more so bringing in like systems and technology. So that was a pretty exciting one. So we closed that one this week, and then here's the one we closed this week. Let me go pop this one in here. Oh yeah, here it is. So here's a picture of the 120 unit in Evanston we just bought down the street. And then this is another one we closed, and we closed this one 2 or 3 months ago. So this was also through Bighorn Capital Fund. It's just a different offering. So those of you guys who know a little bit about my fund, Lilac Way is its own separate offering, right? It's its own LLC, has its own like debt structure, everything's separate, right? But I have a different offering called Cathedral Group. So Cathedral Group, we bought 29 units. This one's a lot more like Lilac Way. We're doing a lot of value add. So anyway, this is the one we're looking at, the 120 unit. And then this is this little Wheatland motel one we closed a couple months ago, 29 units. We bought it for about $550,000. So this one is this is another offering we do have that is open. So I mean, this is a equity fund. It's got a 14% preferred return if you invest $250,000 or more. So this is an open one. I did want to share with you guys today too, in case if anybody was interested in further investing. This is a great equity play versus Lilac Way is, again, to recap for those of you guys, it's a 15% debt, right? We're just paying fixed 15%. We pay it monthly, okay? This one has quarterly distributions, and it's a 14 up to 14% pref, and then it's 80-20 split. And then once we hit 22%, it's a 50-50 split. So I'm incentivized once we hit over 22, that's when I really get to start to participate as the limited partner. So anyway, we bought that hotel, and we just bought a sober living property in Billings. We are closing on that one, I think, next week. So anyway, we're continuing to buy properties and assets in that fund, and that fund is a 5-year fund. I know Steph, and I know Lauren was kind of looking at that one at the time, but that's another option we have too. So anyway, so that's a good equity one for longer term. And then the last one I wanted to show you guys is I'm literally in the middle of this raise, and this is, he put the Revive Club. So the Revive Club, this is one where I can actually work with unaccredited investors. So if you guys know anyone, or it can be unaccredited or accredited. This is the nice thing about this one is it's a minimum of 10,000. It's a little bit lesser return. It's only 10%. But the big part of this one is it's more like I built this one to be able to work with people who had lesser amounts to invest, be able to help them, because some of you guys who do know my big Mount Everest goal is to help 100 families achieve financial freedom. So a lot of those families starting out aren't accredited investors, and they don't have 50,000, which, like, for example, this deal over here with Cathedral, it's a minimum of 50,000. This one's a minimum of 10,000, and it's a 2-year hold. So just wanted to show you guys a couple different offerings we still have going and show you what else we're working on. And then the very last little call out is for those of you guys who are in Houston or want to travel to, we are doing our first 2-day workshop, July 11th and 12th. It's going to be right here in Houston at Hotel Zaza. So it's going to be a really fun turnout. So let me know if anybody is interested in that. We do still have tickets. Even we have a couple VIP tickets left, but this will be a fun little workshop where I highlighted this right here. So the biggest deliverable you're going to get from this, other than a bunch of good speakers and getting to learn a lot, is we are going to build everyone's 10-year wealth plan, right? We're going to take time to like have breakouts. I'm going to have several facilitators there with me to plan out what is your 10-year financial, like what does financial freedom look for you like in 10 years, right? What's the life you're trying to create for your family, or maybe at that point you want to be retired, whatever that looks like. We're going to build that out, and then we're going to once we figure out looking out 10 years, we're going to back up to 5 years, back to 3, back to 1 year. And the biggest deliverable you're going to walk out is you're going to have a 90-day plan of like, hey, what do I need to do over the next 90 days to start to move the needle toward that 10-year goal? So anyway, really cool. I'm really, really excited about this. We've been planning it for about a year now, and we're finally doing our first one. So this is going to be the plan is to do this ongoing. Ultimately, I'd love to be doing it quarterly, but we'll probably be doing it at least 3 times a year. But anyway, any other questions, guys?
No, congrats.
On this stuff or Lilac Way? Thank you.
Nice
you guys
work,
so I'll send out this recording. Go ahead. Thanks, Carl.
Yeah, nice work, Casey. Good job there. Just moving back to Lilac Way for a quick second. Did you just say that the Lilac Way, all the units are ready?
Yeah.
Like all the units are done?
The construction.
Okay.
Construction is finished. Yep. Other than just like little maintenance. Right.
So now it's just lease up, getting it to 90% and holding for 3 months before you can start your refi. Okay. Got it. Thank you.
Exactly. Yep. Yeah, you bet. Good. I should have just had Colin wrap it. That was a perfect summary. Basically, we finished all the units, and now we're just working on filling them up. Cool. Well, I appreciate you guys. I will share this recording, and I'll share links too if anybody is interested, whether it be one of our other offerings or if you guys are interested in the workshop. I'll make sure I put some links in there. And yeah, guys, just good to catch up, and hope to see some of you guys around the summer.
All right. Thanks, Casey.
Thanks, Casey.
All right, guys. Have a good one. See ya.